Hello, hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Friday, March 14. It is 9:11 a.m. in Atlanta. That's Eastern time in the US. Today is the last day, or the first day, when June start trading all by itself. And we had yesterday a day, a downside day yesterday. With, there was a nice day to watch, right? Doesn't mean I didn't do much yesterday, but there was, it was a weak day. The weakness of the day could, the first indication of weakness yesterday was the market fingerprinting its way out, the previous day range. Notice the difference between yesterday's, for example, first print that has this range, and gets out of the range. This is balance. This is an inside day. Inside day to the upside. This is the range of the previous day. Now the range is to the upside, and this is very close, And value is in the upper side of the range of the profile. Also, the previous high or the all-time high is really close, and overnight made a stop close from taking this high. There were good odds here that this market could have made something to the upside. That was the expectation. I remember and this is something that I got from Jim, right? Because I didn't mark this as a pullback, but in hindsight, when the market has a breakout, your market takes the daily high out and it comes back, and it didn't take the previous period low. That was relevant, but I have this level marked as a weak reference moving forward, and my main reference was this one. Not this one. But we are always learning. I consider Jim as a really respectable trader. He's also a good teacher. So you always are learning things. You always are adding more things to your arsenal, right? Always adding. We are always learning. Something that happened based on this, and also later on based on these two, the first thing that happened was the sign of weakness, market getting out of the previous day range, which is a sign of weakness, and change happened here. I consider change here. You can see that Jim has the advantage, right? He's earlier, like one period earlier than me, than I was. So he has all this advantage here, right? Which is good. Now we have change. Something has changed in the market. Also, this is the first day of the new contract. Now we have a 3-day range. The market is out of balance, but it's still inside this range here. It's still this low, even though this is significant amount of single prints, which the market took some yesterday. This low is weak. Something as the day developed, when the market had a break to the downside here, I was wondering here, this period is going to have downside extension in L or in M, right? When this one did not open, or when M got out of L, I said, so maybe there's something to the downside, but I couldn't take my eyes out of POC here. POC was just too wide. The market coming back to POC were high, were not insignificant. They were relatively high, and there were also got a friend, because of trading body here, that was looking at this highs here. Well, notice how close these ones are together, right? If these stops here, if G stops are triggered, what we have above those are F, D, and C. The market can easily come all the way up to this area. It didn't here, and yet it didn't M also. But the weakness, which means that the weakness here, the potential here remains. Now we have today is, end of quarter for this contract, and now a lot of weird things can happen. We have increased volume. We have seen volume is increasing. Now suddenly, what was decreasing, suddenly you see, okay, there's something. Or you say, oh, wait a minute, what's happening here? Huh? We have increasing volume. And volume was higher from the opening. The pressure is to the downside. Value is lower relative to yesterday. But if I put these two together, it's still overlapping to lower, right? But it's still negative. That's the thing. It's still negative. This area here is what concerns me. This area here, notice all this area here. This market could have come somewhere in between this area really with ease yesterday. All the shorts, all the trades that were shorting this market were just, a squeeze here. And notice something that I was wondering also, monitoring yesterday, so what can happen to POC here? I was maybe it could migrate lower. If this happened yesterday, this will be a 45 to the upside, which is extremely risky trade, which makes the loans very risky. But this POC also could have been up here, which makes the opposite now. The opposite, just these two things changing, right? You can see how many times the market comes lower, and how many times the market is pulled back, would have been pulled back to what could have been POC. This didn't happen. The market just settled right at the center, right here, right at the center of the range. So which one it is? None of them. NA. It's right at the center. So this leaves inventory in the lower side here, and inventory in the upper side here. These longs here can be liquidated, or the shorts here can be squeezed right at the center, or it can be both, right? Could be a swing. We can have a swing. There's so many things that can develop here. That's the short term, very, very short term. Now, let's extend our time frame. What do we have here? There's no excess. This is an all-time high. Every single time the market has the chance to close at the high over the weekend, the market did it before. I guess what can happen today, I was thinking yesterday, I started to think yesterday, maybe we may have a glimpse of what this contract can be down the road today. That's something. This area also, it's very questionable. Weakness here, weakness here. Now both sides, you can see. There's also there is, I guess traders can call this like a channel to the upside, right? Something like that. I see it, for example, here as a range. You have a range here, another overlapping range, another overlapping range here, and another one building right here. This one, this 3-day range, 3-day range here. That's part of the job, doing this kind of stuff. Now let's check something that happened today. Always are checking, what can be, what's happening around Adobe. Look at what happened to Adobe today. They reported earnings. They are beating earnings. Look at this drop they have, all the way down to 500. Right? I don't know how much is that in percentage, but that drop in this stock will put this market down all the way to here, right? 500, right where this you have support here, right there, and you have another range for this. I'm talking about this stuff, right? This area can be support here again. That's the thing why these ranges are important, right? This is like a step. Below this, there's nothing. Maybe something here, but that's nothing. It doesn't mean, I'm not saying the market is going to come back all the way down to here, but this, one step at a time. One step at a time. This can be bought from here also. Notice what happened here, right? Notice how this is coming. What this is doing. This is just liquidating, right? It's not doing one step at a time, but boom. That's the way to do it. And let's check the oh, come on, again, I have only 6 minutes. Let's see what big stock is, big tech is doing, how they're doing. Apple, Google has recovered, help us bought from the 200, really important, this 200. This Microsoft is, I think Google is stronger than Microsoft. I don't like the fact it's buying from the 50s. There may be some other weakness in these stocks, and Tesla has lost. There's some rebalancing in Nvidia. Amazon. I think the Amazon is the best one here. All right. Now, other indices. I will come back to this. The Nasdaq was bought right from support. This is a breakout. Twice was sold from this level, and now it's being bought. Right? How many times been bought? 1, 2, 3, 4 times been bought from this level. Okay. There was a massacre here. We talk about also how during the week how weak the Russell was, buying from this trend. Now have to see now if there is continuation here, or this market is going to form a range. The 50 is right there. The Dow also buying right from support. It's close at the support. It didn't get back to this previous high. This just adds more weakness to these markets. Now this was very important yesterday. This level here, it found support. Okay, it was important for yesterday. Now, the monthly, there's no change in the monthly time frame. No change in the weekly time frame. What are the odds that this market is going to break all the way down to 566 today? I'm not saying it cannot happen. Right? I'm not saying that. Okay, what are the odds here of closing inside this range? To close inside this range, to get all the way down to here, the market has to deal with this one first. Fails with this one, multiple times. This market has been bought for previous highs. Multiple times has been bought from previous heights. After this level here, the next one is this one, and finally this one. If this one falls, this one can also fall. It doesn't matter what day it is, especially in a day like this. I'm not saying that's going to happen. But that's one scenario, right? That can play today, or can play next week, or next month, or who knows when. Now, yesterday we were talking how crazy this day will look when the market was down here, if the market make a new high. I guess it was here, right? Somewhere in here. If the market took the daily high, it would leave at the really impressive buying tail, and that would have been a sign of strength in a really strong market. It didn't happen. Closing right at the range, a little bit inside the range. Okay, now we have a trend to the downside here. But the major trends are to the upside. Notice the trend to the upside. This can be a pullback or rebalancing or consolidation of the movement. Okay, now this is what I want to show. Before, every time we have a breakout, that breakout was used to buy. Right? Was to buy, used to buy here, breakout buy here. You know what? How many times, right? How many days? 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. You know what? Screw that. I know the market is going to buy here. I know what's going to happen. I'm going to buy here. Right? That kind of like that behavior. That's a habit now. Traders are in the habit of buying or doing that. Right? Now that they have seen that the same thing happening over and over, now I have a confirmation. Yeah, the market is going to buy. It's going to be bought from this level. This level is going to hold no matter what. That's the thinking process, right? I current this 51.93 as relevant. Where that is 51.93 is right at today's low, right? You see? 51.93 right at today's low, right here. Right here. And what can hard traders 51.60 now you have today's opening right here at the low. The market had looked below, alright? Market had looked below previous day range, but it is back inside. Did we have any news today at 8:30? Empire, import, 9:15, consumer sentiment at 10. This action of what happened yesterday looked like a market just got too short here. This is a continuation of this trade of yesterday. This one. This movement. I guess if this level holds, which is held back, we still have an action that is to the downside. I won't consider M significant relative to this action here, because this is just, it's to me, right? Traders have got to too short here. The market got too short, and there is some rebalancing that happened at the closing. You know, from traders that cannot take trades home because they have to be flat when the day closes. The market's out of balance. I don't know what happened here, man. Oh, okay. Okay, this is Adobe, right? Yeah, Adobe. Yeah. I think so. Let's check again. What the heck? What time Adobe? What time you, Adobe? What time? Is that news? Ah, no. This was yesterday, was it? 16. Yeah, that was yesterday. Don't forget about this. I'm going to keep this one open to remember this week higher. But there's a bunch of stops here. These stops are not taken. Now, look at this contract. There's nothing here now. It's gone. Right? This is gone now. So let's get rid of this thing finally. Alright, right there, it's out of the way. We now have a trend to the downside, right? Check, remember this chart, clear symbols, detach. Remember this chart. Look at the volume. Oh, something else quick for today, right? Really important. Today is the first day. This is for me. This day is, these kind of days are really weird. Okay, weird things can happen. All that I have really close to zero intentions to place any trade today, okay, because weird things can happen. What the references, the way how I see the market, or how I position in the market now doesn't work, you know, just because of this is the fifth day, or this is the last day of the contract. Okay, so that being said, okay, you have to keep that in mind all the time today. You know, this 51.93 is right this. Now we have, you know, having these lows here, having the market taking this low, give us another day to the downside. The market can come back all the way up to here, all the way back to this area, and still be a downside day. All right, keep that in the background. All right. Nasdaq has already has come out of range. Nasdaq looks weak. It's another low Nasdaq is making. I wonder what can happen with this market. Is the market going to do something relative to this stuff here? Now sellers way up here. Why I have this reference here? Oh, this is L high. Now after all this trade, all this overnight, the market opens right where the late trade happened, right? Let's like continuation of this period here, and the auction to the downside here. These highs, these weak highs, the potential here. I think there's potential here, to the upside. And there's 5 character effect potential here, right? From yesterday. I am going to highlight this here and close my profile. Okay, we don't want to. And this is M high, L high. Value is lower. We have lower value. Okay, and market open with a gap. Okay, the market opened with a gap, with a downside gap. The gap was closed right away. This could be some counteraction to this short inventory. Late overnight shorts here. It's coming back to this area here, and the 93 is that low. Is that low from that mechanical low from where traders are buying. Now they are selling from that level. Seems like more mechanical trading there. It's just for us to have an idea who is behind here. When the market closes a gap, the next thing to monitor is value. What happened to value, right? Now value moves lower, or slower than price. Price can go higher really fast, or can go lower really fast. Value takes more time. First, and this chart is in 2 ticks. I have this one in 1 tick just to see. 6,000 is not bad. We have mixed here. Buying, and a small selling, right? Kind of like the sellers are not that strong today. It doesn't mean anything, right? This is just an observation, and the market is just opening. I guess the main observation for right now is, hey, good morning, man. I'm sorry, I'm just checking the chat. The main observation is the market is out of balance. Okay, the market is out of balance. Look at ES 30 minutes. Big move overnight YPOC2. Yes, of course. This is very prominent POC, and we know very prominent POC have the tendency to attract the market, right? Back and forth. Not just that, but also yesterday's POC is wide, almost as full as it gets. Now something that I got in my homework yesterday is, the potential for this market to have swings today, to the upside or to the downside. I guess the first part, if I have that day scenario, I guess we talked that early also. You have that day scenario, the lower portion is playing out, and the next thing can be market coming somewhere up to here. The thing is, if the market once the market, or if the market comes back up to this area, taking these stops. Remember, you were talking about the firecracker effect yesterday. It wasn't that full, right? That would be better with this POC being lower, and when I guess I was more kind of like I had in my mind the potential of the 45-degree line here, but POC closed right at center. The relevant piece of information for me was POC. I was watching where POC can be, and this overnight, do not fix these things. There is still potential here. Up here, there's a bunch of stops here. Now, if the market, now the thing is, can the market come back to this area, and these stops can fuel the market to make new highs? The last weeks, every single time the market had a chance to make a new highs, the market did, and I think that traders are in the habit now. We are going to make new highs every Friday. We have new highs, right? And the trade has been, go with the breakout, and the market will be close at highs today. No matter what happened, no matter what is out there, the market will close at highs. Okay. No, there's not much stops here on the low side. I think the more the downside can be played by firecracker downside. I think maybe this is a reaction to yesterday's Nvidia. Could be. Because the next thing the market will focus is earnings, right? Maybe in the next 2 or 3 weeks. I think next week also we have FOMC. Next week. Yeah, we have FOMC next Friday. Oh, we also have Chairman Powell press conference next Wednesday. What else? Nothing else. Inflation rate, Japan. No, we don't have nothing else. I guess the most relevant thing for next week is FOMC. Now, I guess what is, maybe we have some Fed speakers here. How much? Yeah. What about if I do this one? Yeah. There's nothing here. No Fed speakers. No nothing here. When the market is high, the speakers just leave the market. When the markets are going too high or too low, that's when the speakers have a tendency to flood the news, to getting. But the most important thing for next week is FOMC. We may see some positioning today or maybe Monday. This can be one thing, right? One to the downside and the next thing to the upside, because both sides are. Yesterday I had this was my reference late in the 93. The market didn't come close to a high here. This level is weak. There was no taper here during this day. Same thing that happened here when this market break, when we had a break here, I believe, or here, I don't remember now. No, the firecracker. I guess you are too focused on that now. I will see, for example, that potential. This is 1, 2, 3, 4 days back in time. What happened here? I don't remember what happened. What I highlight from this, remember this day, is the market was bought right at support, which was the previous breakout. That's why I have this one. That's what I remember from this day. This is this is breakout. The next thing on the downside is this one for me. This one has failed. This level, this one has failed. Has been taken. Oh, sorry. This one too. Every time the market tries to bought from previous high has been the market just didn't hold. The market is going through those ones. So the next thing that is the expectation is traders will buy here. Let's catch a knife here because that's what the market is doing. Now we are still inside this 3-day balance. This 3-day balance here. Okay, the market is out of balance right now. Now out of balance of this of yesterday's range. We are out of balance. Okay. Next thing is this. What can happen here? Okay, we can have downside acceleration here, or the market can be bought from this area here. I think this is a critical level here. I got too many. I have too many references here. And there's change in the market too. Okay, the market has changed. We have a trend to the downside now. This is balance, right? This is an inside bar. This is breakout of balance. This is breakout of balance, or this balance. Now, today is also not the breakout of balance. The next balance we have is this 3-day range. And after that, we have 1, 2, 3, 4, 5, 6, 7-day balance here. Bigger one here. Every time this market has breakout this balance here. Now you have today's balance, right? It's out. Now the next thing we have 3. Okay, and next thing we have I think even not 5, but 7, 2, 4, 6, 7 day. Okay, which remembers me of the big one here, this one here. Okay, this was a go no. Oh, look at where the market is right now. It's right there. This volume here, okay, can be misleading. Okay, today is a special day. Today is a special day. So it's not like any other regular day. Alright. Oh, come on. I may see the market wrong and miss. This is a bigger one, and this is, for me, this level here is a really important one here. Really important. This one, the 51. It was the 51.66 in the old charts, but this one is the 51.30. Look at what's happening here. You expect. This is what you expect buyers to come. And what happened? Buyers came here. I don't think this is going to hold this level. I have no plans to do anything today. Really, I don't. And I have several reasons to have that mindset today. One, I was badly hurt before. Two, when I made the decision to not to do anything and then change my mind later, I was hurt also. Uh, and and three, I mean, if what you were doing didn't work, okay, do something, right? That's what I'm doing now. Okay. Um, what I can take out of my mind is what you have mentioned yesterday, right? We have a downside market today. We have a downside market today. Okay. 5-cracker effect doesn't happen that often. 45 also doesn't have that often. We have this thing yesterday, here and here. Yesterday, the lower side to me wasn't, it was weird to say the least. Especially, this is the end of this, was the end of March, which is we don't have March anymore. Now we have June, right? We have June. Shorts were forced to cover yesterday, but the fact that short that rally didn't take these stops also tells me something, right? It was so easy for the market to come all the way up to here, to this area here. It just didn't, right? It didn't have the strength to do that. So there is something there also, right? That tells me, that this market is not as strong. The market is weak, right? I cannot say, I mean, relative to yesterday, to the movement was I wasn't present in the market because I was watching the market taking this low here against L low. No, I said, boy, I was tempted to do something here, but I just even though because value was lower, but POC was too wide and too high and right at the center at the time, very close to the center. I said, boy, this is not. I'd rather go for a walk. I left the trading. I just step out and leave and left the trading desk. So because the temptation was there, all right. And I was checking also. Remember yesterday in the previous contract, I was checking this. I had these calls, one calls around this area, and my calls in the lowest, my puts were here, right there. What there? Yeah, you're right there. My puts were here and my calls were here. No, and I just, it was so tempting. I better walk. That's why I left. I didn't see the closing yesterday. Of course, when I come back, I say, "Oh boy, come on, right? I should have stayed." But no, I accept those things now. Now the market is coming back, to this right one tick from this low. Going long here is quite dangerous here. Very, 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 very dangerous to be long here, buying here. But this market can come back all the way up to here too. All right? Now the next thing to monitor for continuation is, what I'm watching here is value. Now this thing, all right? There's a quite buying here. I mean, blocks. I have said that. Okay, no, this is wrong. I will put this 150 and 250 here. I have some trades here, significant. Some volume, big blocks coming here, but there's a lot of pressure here. But from trading, that's not that. Doesn't look that strong. Having this amount of pressure on the downside with volume decreasing, volume, it increases the potential here of these shorts. These shorts are kind of like weak ones, and these guys can be squeezed out or forced out just for the market to come back again. Once this volume is clear, the market can come back to the downside. But look, something that is worrying here is the volume. The higher volume is to the upside. But this is still the first period. We're having downside continuation relative to yesterday's trade. As long as this level remains, which happens to be overnight held back too, I'd consider this market still has potential to the downside, especially having this low right there. Notice the volume too, okay? Notice the volume. If this volume was a day, any day but today, which is the last day of March contract, this would be different. This is extraordinary high volume, right? The usual, if I see 100,000 is really high, but now we have like 300,000. There's a lot of volume here. But that's normal for this kind of days. But this day happens every 3 months, right? Every quarter. Yep. We have consumer sentiment coming. Let's see what that does. And look at this, right? Who buys down here? Who buys down here? Somebody put something here, really high, 500 contracts, boom, at once, right? And then there's some buying here. It's not subtle buying, right? Notice, if I see this, everybody can see this. The same amount of volume that came at once. Look at it here. But you don't see this thing, right? This is this guy. This isn't this guy. You don't see anything here. The same amount. That guy. Remember that guy that made 5 millions that Jim talked about? This is that thing. That guy. We never know, right? We never know. How this happens. I am just, and the thing is, I am just speculating here. I'm not saying that's what it is. It's just speculation here. Nobody knows that. Just the people who is doing, only they know. Because it's not in their best interest to let anybody knows. That's why Jim said, if somebody let me see what they're doing, I don't want to know. And that's this, and that's this, and that's this, and that's this. Alright. I have 10 seconds to change periods. I guess if you are, I don't know what's the delay in Twitch. I guess it's like 10-15 seconds in Twitch. Alright, that's consumer sentiment. This low has been repaired. This one, technically, this one has been repaired too. Just, but the move is just enough to clear these ones. Just enough. I've seen this happen quite often too. Look, just like in here, for example, right? You have this, and then this one clears it, and then boom, technically it's clear. And then it comes back and take the whole thing. I'm not saying that has to happen, right? But when the market comes back to this area, maybe tomorrow, maybe Monday or next week. There's potential here. These stops are still there. These stops are here, and from this day there's a lot of stops here. Remember, this day has no taper here. That's why I have this is, one at POC, and second there's no taper. It's a low like this, it's a low like this. It has a bunch of volume low side. But as you can see, it not necessarily has to be repaired the same day. It's not, it would just, if trading was that easy. Also, something else that I really show the system now. We don't know, man. I wish I can answer that question. Because if I knew the answer, I would be, in market, I don't know what time is that. 10 or 1, I don't know what time. If I knew the answer to that question, I guess the market was going high, right? When you say that. If I knew the answer, I would be low, no? I wouldn't cover. I don't have, as I say today, I have zero intentions to do anything today. What I think can happen, do have the potential today to have, large swings. I talk about this scenario here, coming back up here, then down here, or coming down here, and then up here, right? But that thing can be relative to this level, for example. So maybe market can take this one down, and then come back and goes around this. Having this range, right? We have this day and this day, these 2 days here. Now can you see what this day does to this one? It just adds volume to this. Now we have a second distribution here that was closed. This day has 2 distributions, yeah? And this adds value to the top. And this one adds value to this one. No? So we have, what do we have here? We have a day, looks like a pin, but we have no excess at all. There's no excess here, this day. But this contract really starts to have volume here in this day. If I check the volume of this day, there's nothing here. Maybe like 10,000 here, or 50,000, that's nothing. So the market needs volume to go lower. And guess what we have today? We have volume, right? And all the things, but and that would be thinking just too much. I would just, tell myself crazy. I think if I think too far, too much down in the future, right? Yeah, let's take the market one step at a time. Oh, check this. This happens also when I have a position in either side, right? I have noticed, for example, right now it's only 2 periods. This works with larger periods. Right? Now, what happened with the POC? Halbach. Halbach slided high this period, right? Slided high. When this happened, I don't know when this is. I guess POC was here, right? Now has moved lower to the high. Now if you check that thing, you will see that it often happens that when there's a movement to the downside or to the upside, the market has some buying or selling once POC becomes a reference. Right? Like yesterday, this market dropped just enough to move Halbach to POC. It's not. It is just something that happens. I'm not saying that is something. And this is just weird. right? One of those things. What's happening here, right? I started to watch that when I had position. There might be something there. Like time to cover or trim or hedge or do something there. Market is having downside continuation. Next thing. Value area low. Notice where it's being bought from. Notice what happened. Notice what happened here, for example. Right? This market moves hard back right to the high and then spot. I don't know if that's coincidence or not. Right? That's just it's weird, right? It's weird. It's weird. And what I do is if I have something here, for example, something, and I see the market moving this kind of references, right? That everybody can see. Down to there, okay, there can be something here, right? Something. If the market doesn't pay attention to that, that's good. That's good. That's good for the movement to the downside or to the downside. But if the market does something that's also an indication that who's behind the trade. Some algorithmic trading there. But who else who else can do that, right? Somebody who programs these things, who do some programming. Okay, when this happens, do that, right? Because people don't do that. Traders that are in front of screens don't do that. You need to have a program. You need to. Yes, volume. NYSE has a high volume, but remember today is officially the last day of the rollover. This is normal for today, so I won't consider that significant. I won't give that too much weight today. Let me show you. Can you see this day? This is the rollover. I expect something like this today. This day probably we end way up here also. Something like that today. Something like that. So it's the expectation for today. That's what happened. This is the opening, right? For that day. This is another one, the other contract. This is the other one. This is the other one. And can you see? This is wow. This is huge. It was March last year. Okay. Notice, right? That's normal. But I can say regarding this contract is something. Now that you have mentioned that, notice what happened in the previous days here. Really high, right? Well, high. What happened here? Low. What happened here? And this is the low side actually. The days preceding this, the preceding today, the days preceding the last day, this is high also. And look what happened here. Have a huge drop in volume. This is I don't know what happened. This might be a hard day. This can be holiday. This can be holiday. Who knows? Really? No, this is not holiday. This is a bad day in volume. This is over a million. Now, we have a breakout of balance and the market come back inside balance. We have a breakout of 3-day balance and the market is back inside that 3-day balance. Again, breakout, come back inside, breakout, come back inside. Next thing, the 2, 4, 6, 7 day, let's see if that repeats here. It's come back. Let's see if this has a breakout of this balance and comes back inside. Inventory now is short. Okay. Inventory you have this 1, 2, 3 days are short. This is the first day. The all-time high is the first day that June has been traded, that has volume, and that inventory is to the downside. Every subsequent day also has added to that inventory, with this one being the exception. It's just 5 days. Oh, no problem, man. We never know. That's the thing. We never know what the catalyst can be. For example, everybody's expecting the market. I mean, the Fed cut rates this year. Now, all this movement that started in November last year, is the market trading in expectations of rate cuts. We went from 8 rate cuts, the experts, quote unquote experts, were forecasting 8 rate cuts tomorrow, this year, starting on February. Every other month we have rate cuts, all the way down to I don't know what. Then in December, no 8, I guess that's too much. It's 6, only 6 rate cuts. And they just keep moving that thing. Now, for the experts are forecasting only 1 rate cut this year. They went from 8 to 1. Okay, so what's the relevance of the experts? You may ask, right? So that tells you a lot about the relevance. What matters is what we see here, right? The contracts coming in and out of this market. That's what matters. That's the most important thing. Again, same action. The biggest side comes when the market goes higher. Biggest side comes when the market goes higher. This is another catalyst. The market is holding. The structure is weak. We never know what's going to happen. There could happen, something can happen with China, for example, right? Or something can happen in the Middle East. Something can happen here. Don't know. We never know those things. One thing that I was checking is the inflation. The inflation number wasn't good, and the market rallied despite that. The inflation number wasn't good, and that was an indication. That is one thing that gives the Fed another reason to not cut rates this year. But the market didn't care. The market just, rallied after that. And then comes, emotions settle, and I guess we are doing just thinking too much, right? And all of those traders that went long were forced out. Now look at what's happening to the market now. Back inside yesterday's range. Oh, by the way, something that I did not. Look at this. This is L high, and also is the base of this spike. We have a spike on the overnight session. We have the spike. I don't know what or why. Oh, this is no man. This is night. This is the last period. You know, I would consider this the beginning of this. You know, this thing, this K here, is the reaction to this one here. You know, you can see traders getting very emotional here. Right? And now the market is going to take, and when you see it, you know, the overnight could easily open way up here because it has a lot of supply here, a lot of stops. Once traders see that, you know, this market doesn't have it. The market doesn't have. There's no buyers here to take these ones out, and now this is the beginning of today. Or today's, because there's nothing there. There's no news. If there is something in the news, it will be here in J 8:30. But this is I just saw this one. Because of the day, the type of the day we have today, I wasn't, you know, I wasn't interested today. We kind of like monitor the market yearly, didn't have any news, anything like that. But this is something also, you don't expect these things, right? But you can explain, you can see what happened here. Right? Thank you. I didn't notice that. I did not notice that. Because you talk about this. You talk about this. And a catalyst, I guess, to answer the question. A catalyst, for example, all right? We have, let me pull my bar charts again. Okay, I have several markets here. Let's do this. Okay, we see weakness here. For example, this is a Dow. We see weakness here. You know, buying from this level, okay, which is no good now. This market is buying from a trend, right? Just let's forget that this is. Just think that this is the ES instead of Russell. Just the ES here. In one scenario, this is another scenario of ES, for example, buying from this level, buying from a trend line. This could be another scenario, but this look similar now. The ES and Nasdaq look very similar, right? Look at how it is. You know, in one scenario we have the market, you know, trending, buying from a trend. You know, there's tremendous amount of weakness here, right? Is this market where the ES is barely holding the trend, but the market don't care. The market just keep rallying, buying the dips as close as possible to previous day low. You know, buy the dips here, and suddenly something comes. You know, out of nowhere. Can be, let's see, the OPEC is cutting production to half, reducing production to supplying 2 million barrels, for example, or you know, or the Chinese government is imposing a tariff, right, for American for imports or exports, and that is the catalyst, right? That's the catalyst that can trigger a sell-off in a market like this. You know, if the ES like this, it can take all this inventory out. That is a catalyst. You know, that can be the Chinese doing something, the OPEC doing something, right? That can take this loss, right? The market is buying. This market is weak. The Dow is weak. no questionable buying here. There's tremendous amount, there's potential here, tremendous. If the market takes these lows, what we have here below is what you are talking. Well, this day in this market did not take this day. There was potential here. It didn't care. It just keep going higher. Now we are. This market is having more weakness here. There's huge weakness here. You have 1 day, 2 days, 3 days with huge amount of stops here. And guess what we have below? More stops right there. Right? This kind of looks like a two distributions. If we put this range, these days together and these days together, we have one distribution on the upper side, one distribution on the lower side. If these distributions are close, the potential, now we have this build, the potential to the downside, and maybe the 50, a little bit lower, below the 50. This market is bought around the 50. The potential still is there to the downside, but that's a weak buy. But if the market didn't care, you just keep going higher, right? But something happened out of nowhere. You have something. It could be, come on, let's see it. God forbidden, right? God forbid, for example, the president of the U.S. dies, or some, maybe the Russian president dying could trigger a rally, or if there's a coup in China, or if Putin falls, right? There's uncertainty there, depending how it happens. Right? Those are catalysts. We never know what it's going to be, but it's something that can trigger some kind of reaction in the market. And all this potential that is being built is just executed right away. But you got to be aware of that. You got to be aware of that too. I hope I answered your question. The Dow is the weakest now. The Dow is the weakest market now. This market is the one with more potential to the downside. Notice that this market has look above and is selling from this one. Right? This is the go or no go level, in short term in this market. Here is this one. The 60, well, it's not a 66 now. It's not a 66, but it is a 66, right? What for the ES would be, for our market, for my market, it would be this one. The 66 in the new contract is the 5130 now. This one here. Oh. As I said yesterday, I really like your time zone. You have you have a daily job. You just come. You just can come to the market right after the dust has settled. 3 hours, right? I guess your 5 o'clock is like our 11 or 12. Your 4 or 5 o'clock is our 11, 12 a.m. here. Really nice. Because when you linear, I made a mistake. I make a huge mistake. which is I left everything. I stopped working. I went full in trading. I didn't allow for the transition, from like going from one business to the other, like a smooth transition. Look at what this market is selling here. Can I say this 93? Do you know about the 93? Do you remember the 93? Right? I lost track of this level yesterday until very late in the session. Even though we talk about that in the stream, is this one, right? Now the market is right there, back at this level. Okay. So regarding location, this could be a good location. Eh? This is a good location. The market is going to let you know that you are wrong. Doesn't have too much. The market doesn't have to travel that much or that far from this location. Now, is this a visible reference for everybody? No, because it's this way back in time. Okay, if you check your charts, it's way back on time. No, not many. The ones who have this, the ones who has this reference. Why this level is important, right? Why this level is important? There is something there. Unlike the 5200, for example, right? Or the 50. Those entry numbers, right? The traders use to sell or buy. There's nothing there. This one has something there, and it is right there, right there. Now, if you have an opinion of the market, this could be something for you. Now, what's the weight of the options here, right? When you have options, the market can come back all the way up to here, or maybe here, and still be, it still have potential, right? And the options will not move that much. If that one is 5 points or 3 points, they may go maybe 1 point, depending on your. You also have to consider the expiration, right? What kind of contracts you can have, and it can even go up to here. It will depend on your time frame too. But it's close. It's a level that is close. That will let you know, that the market will let you know, okay, this is good, this may have some potential, or definitely this is not working. And the options will drop in price 1, 2 points, 3 points, which is not that much relative, or if we compare with straight futures. Because if you position yourself to the downside here, going above this level, all the way up to here, you are already 3 points outside, underwater. Coming from this level here, you are 6, 7 points underwater here. And this is the location here. This is a good location. The market is right here, right? It's again doing what the market did yesterday, working its way up, working its way down, back and forth, just as yesterday. Can you see this? Can you see the market repeating itself? Traders are doing the same thing that they did here. They're trying to make the thing work. The thing that worked yesterday, okay, is going to work today. They're doing the same thing. And yesterday, they did the same thing that the day before. It didn't work. It is going to work? Who knows? But that's getting in the way. That's trying to figure out what your competence is doing. right? Because after a movement like this, late in the day, what's the first thing the traders have, or what's the last thing the traders have in their mind? We're going to make new highs. Every Friday, the market has made new highs. We are going to make new highs today as well. That's what I think was in the mind of traders yesterday. And when you do your homework, it really helps. You know, it really helps to to shake off, shake those thoughts off your mind, because that's the market. I mean, because we work with the screens, right? The market tends, and we have a tendency to be just to have in our brains the last thing we see, the last thing we saw. And when we just this, right? Just this thing, just these things helps to like shake your brain. Right? Okay, there's something more than just the intraday here. And then you start adding more layers to that. You start to maybe monitoring the other markets. Okay, what's happening with the stocks? Also, before I hear Jim talking about consent, he talks about consent. He talks about that concept all the time too. He talks about this. The time when IBM was carrying the market, right? And you start noticing that thing too, right? What was carrying the market was Apple. Then Microsoft, but more Apple. Apple has tremendous weight on these markets before, and you notice, there was a time when if you remove these stocks from the market, the performance of pretty much everybody else was really bad. There were all times lows, with these few exceptions. So that talks about the concentration here, and that usually, this is James words, right? Those are also late stages. When the market gets that's not good for the market. It's the last stages of the bull market, not before a correction, but trying to up from the correction is also one of the worst things that we can do. If you take a short, this 93 reference, right? And to begin with, is that a anchor trade? Is that a fast trade? Is that a slow trade? So why you take the trade? Or something. You need to have your reason to that. If I do that, first, that has to be a developed trade. Right? It will take time to develop. It won't go so fast, because that's the direction of the movement now. We have a downside market. We have a trend to the downside now, intraday trend to the downside that has been established today. For this trend to be over, the market needs to take this high. Right? We're kind of far, but the potential, if this comes here, we can make new highs. Right? Value is lower. Value hasn't moved since the opening. We're having three periods wide. Buying from halfback is a good sign, right? But there is some mechanical selling, right? Can you see where this market is selling here? As close as possible to previous period high. Something that will worry me a little bit, because that is what was happening yesterday. Yesterday was a day when all rallies were being sold. Okay, that was the trade yesterday. Sell the rallies. That was the trade yesterday. Sell the rallies. Okay, every single rally was sold. Every single rally was sold. Rally sold, rally sold, rally sold, rally sold. And today we're going to try to do the same thing again today. Why? Because it worked yesterday. We have value lower, we have a breakout range, the market has come back with this range, keep going. It come out of this range, has come back, it's come out of the 3-day range, it has come back. So that's not something, the market doesn't have the commission. We have extremely high volume. Remember again, this thing, today is not this is not a day as any other day. I am better. I know that I know for a fact because of the way how, because of my statistics, I know that I am better off in this market today. But that's me. That's only me. That's only me. Now, I can see, for example, here, if I take a trade here, we have an action to the downside. Now, this thing, the action to the downside has ended now. Can this be the beginning of the new action? Notice where the current action is starting, right? Very close to the center of the range. What we had at the closing. what we had at the opening. We were talking about this selling, the sell-off that happened in the pre-market as the first trade, as a reaction to this short covering that we have yesterday at the closing. Like all of this was all of this action here that happened here has been taken care of now. So what is relevant now? For example, right? This side, what you said yesterday, the bunch of stuff that we have here around this area, that can be, that's it's coming back to it's coming back to my radar, right? Now I'm paying attention to this because of this moment. But I want to see, right? The trade, for example, if you were asking if you take that trade, that 93 reference, that trade is over. It didn't work, right? I didn't expect the market coming back to this level, but maybe once, because you get into the trade when the market was going lower, right? It got close to halfback, which was a good sign for the trade. The trade may work, but now it has come back around, has come back about the basic thing, about the reference, about the thing around which you have built your trade. So the trade is not good. The trade didn't work, and that is gone. So what's the next thing now? We never know, right? We never know what's the next thing. It just can come out. This kind, I don't know right now, because I am just talking about this moment, right? Like 10:40 p.m. 10:40 a.m. Eastern time here. Your question was like 7 minutes ago. What was I going to say, God? What I was going to say, I have my doubts if this trade would qualify as something as looking for a trade. Okay, because can you see how I'm looking? Because what I was doing, I was monitoring the market. know what the market is doing, right? Selling from this. I don't see, many traders don't see this thing, right? It doesn't mean that nobody sees it. You know? It's like kind of like looking for a trade. But I have my doubts, right? I have my doubts. In hindsight, okay, I mean, but I have my doubts. I'm not going to lie about it. And what you monitor is you know, you monitor tempo, but when you have a developed trade, it takes time. It has a tendency to be quite uncomfortable. You know, because you think the trade is not going to work. Man, this market doesn't have it. You know, you start to second guess yourself, right? But there's one constant there, that you see the market working, the trade working, the market doing what the market is supposed to do, based on the trade guidelines you have for that specific trade. In this case, you know, the basic has been broken, right? The market didn't have to travel that much. If you take the trade here, for example, at the center of this period, I guess it was like 2 ticks below the high, right? It was something. Correct me if I'm wrong. I guess it was 2 ticks below this high, no? And the observation that I made was trades were doing. Maybe trades were doing what they did yesterday. They were just selling rallies, right? And they're doing the same thing again. I will try to do the same. But if you take this trade, you know, the exit or the stop was, you know, the market get too close to this high or come back to this high, specific this high, that was it, right? Or maybe this, and you don't have much here, right? How many points? You know, let's say you take the half here. 89, that's how many much points? Like 3 points, you know, something like that, right? Yeah, And one of the things, right? One of the fundamentals that is broken, that has been broken when you place a trade, right? It is one time frame lower. When that stops, the theory, the fundamentals of your trade are gone. So that trade is over. And we have the tendency, okay, but this trade can still work, right? The trade can come back. The market is coming back. It's not going higher. It's not going in the opposite direction as fast. I'm not going to close here. I'm going to close here, or maybe a value very high. And when the market comes back to value very high, I'm going to close here. And you start watching the market, having a pullback. Oh, okay, yeah, it's working. You start paying attention to this, and then the market comes back up to here. And now I'm going to consider that. And that is what kills, right? When you set your rules. When you have your strategy, set your rules, and you don't respect the rules. Because it's so hard for us to take losses. We don't like to lose. Nobody likes to lose. But we do. Yesterday, for example, I did four or five. No, I did 4 trades yesterday. 2 were for a loss, and 2 were profitable. The day was positive. But half of my trades were losses. Yes, it depends too much on the visual ways of traders, so buying is coming more easily, I guess. Yeah, the markets are designed to buy, or to buy, right? After all, when these big companies have big positions, even if you have a portfolio, it generates your income. And these hedge funds don't have 100,000 or 1,000 stocks, so they have millions. millions and millions. They generate billions of revenue, and they have to allocate that money, right? So there's more buying that comes up. Buying is coming all the time. That was something hard for me to assimilate. Because I have this contrarian mentality. My father, it comes from my father, right? My father, whatever opinion you have, he will just say the opposite of what you say. It doesn't matter what you say. You may say one thing, and he will be in the opposite side of that opinion. And if you change your mind 5 minutes after that, he will change your mind also, just to be in the opposite side. And that's the environment I grew up in. I've been raised in, and that's one of the things that I had to overcome. That was a big obstacle when I choose this business. To acknowledge that and just and it never goes away. It is always there. It is always there. Yeah. Yeah. Yeah, it's fun. This is I I I I I say to my kids, to my children, if I am wrong, then you are wrong. Because I am never wrong. And I don't say that as a joke, right? I used to say that as a joke, but I didn't understand. I didn't realize that kids have, the way how kids see the world is different than the way how adults see the world. You may say that as a joke, but this kind of, if you don't pay too much attention to that, you can actually building something there, something that can hurt your kids down the road. Yeah. I did, as an anecdote, I realized about that when I was kind of like, I am a big brother. I have two sisters, younger than me, and the youngest at the time, how youngs, I didn't know that the youngs kind of like have the eldest as a role model, right? And I was kind of taller. I am taller than my sisters. And when she was young, I was leaving. I just left high school. She was in elementary, and she still didn't develop. She was short. Yeah, like just a kid. And I say one day when we went shopping, I say to her, "Girl, you are not going to grow. You are going to stay like that forever, because, our parents don't have enough money to pay for your growth, because we had to pay taxes for to grow. We had to pay taxes to grow, and they have spent all the money in me, in me, right? And the money that was left was used for your sister growth." She was the youngest, right? The middle sister. Therefore, there's no more money for you. I say that as a joke, right? And I saw something in her face, and I let the joke, I thought it was a joke for her. It was a joke for me, but I said, I just leave it like that, right? I didn't laugh. I was dying inside. I was dying louder inside, but I didn't externalize that. And then I forgot about that. And years later, she told me she was traumatized. She was really sad when I said that. and we part ways. She went back. I left home, and like 10 years later, she told me that my aunt, noticed that she was sad. Right? She was really sad. She was really sad, and she was crying. Now, why are you crying? That's because I'm not going to grow. I'm going to be this short. I'm going to be really short the rest of my life, right? And and that's what my aunt said to her. No, that's not true. That's not true, right? That's not true. You will grow. Taxes has nothing to do with that. But that thing has a deep impact in the kids' brains. Right? That's and our parents have also, the way is really, we have a lot of traumas. Right? There are few people who doesn't have too much traumas. Thanks, man. Appreciate those words. Thank you. I am enjoying my time here. I'm just relaxing here today. I'm not doing anything now. Oh, you have two big brothers and two little sisters, and you are right in the center, right in the middle. That's interesting. You know, that's also really, the middle siblings, have really hard times also, right? Because they are fighting for power with the big brothers, and also fighting for the attention that the little ones are having. Those ones, the middle ones are like forgot. Yeah, the middle ones is really hard. Yeah, yeah, they're hard to fight. You cannot compete with the youngest also, because you're too big and the youngest have all the attention, all the parents' attention. Yeah. Oh. Now, coming back to the market, the developed trade here, the developed trade can actually be to the upside. Your observations from yesterday, remember what happened here yesterday? Huh? We have a lot of stops here. And the market can work its way, Now, how do you change your mind when you have this one, right? It's still, now may see maybe this is a reference, but in the opposite direction. Remember, each time this reference has been taken, the market just bought from this. I don't know, man. I'm just staying out of this market. Let's see. Monitor the market is that. What can happen now? Can the market come back to this area? What I see for us, what overnight inventory is? Overnight inventory was long. No, there was a correction. There was a correction on the way here to this short inventory. It didn't correct it. Instead, this added. This is short overnight inventory is mostly short. It has a prominent point of control. Tremendous amount of single prints. I guess there can be something here, and this happens to be, unless, as less as this period here, this high is taken, I guess we still have a downside market. Oh, this is but why I put this here? Don't know why I put this. Oh, this was this high, huh? It was taking. This was taking. This is also a previous. And now February high is way down here. Yesterday, you know, this reference February high was really important yesterday, because yesterday was down here, was up here. But you got to see you got to check the March. You got to say March contract. So there was potential here, you know, for the market to doing some buying here in the old one. But that is now out of the way. That's not here anymore. Here is when, you know, it's really far. And now look at this, right? This area has been bought. This is a go no go area, and now also has this reference. This is a monthly high. Now, is this a look below and failure? Instead of having this as a reference, short-term trading has 1, 2, 3 day range. The market look below. Can the market come back up to here? And weird things can happen today. This is just, if you check the volume, there will be tremendous amount of volume here. Maybe not that much, no? Maybe like 20%. And yet, remember, yesterday this was 20% high. Okay, 31% higher than yesterday, the first period. Now we have 15% higher. But I won't consider. I won't take this as relevant. Today is an unusual day. Happens every 3 months. Oh. Do you remember when this market was going lower? How held back, you know, this break stop when held back became, when the high of B became held back. It was something like that. Was it? I remember we talked about that. It was something like that. And now we have rally and there is some selling just when ceased. You know, when held back, you know, this extension, some line extension here, and now held back is moving lower, is it? And it was moving high. Those are just observations, man. That's just observations that can add another, you know, thing to monitor. You know, if you have a happen to have maybe have no reason to buy here, for example. This also hard back. This hard back here. Maybe too far, 1, 2, 3, 4 days behind. But it's a mechanical buy here. It didn't have, the main thing didn't have continuation here. The next thing, value low, market didn't look at that. Another buy from hard back here. So there's nothing here, nothing now. There's nothing here in this market. There's tremendous amount of volume, but you can see there's nothing here. It's just like any other day, man. Volume. I want to see now. No, it couldn't get out of this day's value area here. Now let's see if this market can have penetration of this value area from yesterday. No, no correlation between more volume and distance travel. No, this day here, I mean this volume here is, this is ironic, right? Volume is irrelevant today because this is what you expect. The expectation today is really high volume, so it becomes irrelevant today. So I would be, if I do this, it won't affect. I think won't affect the check-ins. If you want to check volume, we can do something else. No, we can check here for something. We have high volume yesterday. What happened yesterday? Another break with higher volume relative to the previous day. What's happening in the weekly? Now this week may have high volume, but this last week, right? And this is tricky here. There can be something here. Now that I see, and this is how technicians do the observation. If we see high volume, you will say, oh, this is a breakout, this is a breakout. The breakout has really high volume, so that's a good market, right? But that volume is not, as this day, increase of volume here is this increase here. What else? Or this increase. Wait, this is much. And this increase here, this higher volume here, is way more relevant than the volume we are going to have today, because this is what we expect to have today. The weird thing would be, or the nuance would be, or it would be a nuance if instead of having a really high volume here, we have lower, below last week, for example. Right? Let's check, for example, and let's check the monthly. Come on. Monthly is coming lower, and that's not bad actually. A rally with lower volume is not bad. Pullback with lower volume is not bad. Range with lower volume is not bad either. What I was going to do? I said I was going to do something here. I forgot what I was going to do. It was going to be relative to volume. Come on, man. This is. I wonder this may be. Nah, I don't know. I have nothing here. Oh, I was going to check the volume of the contrast of the ES itself. ES itself. Okay. Around these times in the past. All right. This is the last day. Actually, this is kind of normal. That's why let's check another one. Yeah, it's back to normal. Friday. Look at what happened this day on Monday, right? The bulk of the pull-up was on Monday. Friday, nothing happened. Monday and Tuesday in this contract. And this one, oh, okay, this one has Friday, Monday, Tuesday, Wednesday, even. And this is just ES. Oh, this is. Oh, look at this. This is really hard. Well, this is 1 month. It's 6 million here. But it was a. What day is in March? Oh, this is 2020. It's huge. Boy, do I have more here? No, I don't have. Okay, I have more here. No, this is nothing here. 4. Alright. There's nothing here, man. Now, something may remember that we don't look for a trade, so you have that mentality to let the trade come to you. There might be something here. You have an inside bar. Potential, no? There's potential for an inside bar. A really nice inside bar. Really nice inside bar. Narrow range so far. This is only 7 minutes into the period. Another thing that can happen is maybe the market may come back down to here, being bought from here, which puts the market at half bar, which keeps the long, increases the risk in the long side. But what do you do, right? What do you do here? Buying exactly for very mechanical buying here and having this potential up here. You just I don't know. I don't have. To be honest, I don't have anything here. All right. I guess this is 11:10 a.m. I guess I'm going to call it a day. I'll be here as usual all day long. If I was planning to have some, to have some rest, I went to bed really late yesterday. Okay, man. Unless you have any questions or comments, I guess I'm going to call it a day. And I wish you have a wonderful day. Have a good rest of the day and have a wonderful weekend. See ya. Bye bye. Bye bye.